All right, let's move away from politics for just a moment. Statehouse spokesperson Manoah Esipisu says President Uhuru Kenyatta will consult widely before deciding whether to sign into law a bill that caps commercial banks' lending rates at just 4% above the central bank base rate. This announcement comes in the wake of reports of intense lobbying by the Kenya Bankers Association to dissuade the president from signing the bill.
After Parliament unanimously passed the Banking Amendment Bill, which caps bank interest rates at 4% above the central bank rate, all eyes are now focused on Statehouse as Kenyans wait in bated breath to see whether President Uhuru Kenyatta will sign the historic bill into law.
The President remains committed to finding a solution to the high interest rates regime in the country, and indeed it was one of his campaign promises, and he is committed to fulfilling that pledge to Kenyans.
But as President Kenyatta prepares to meet his legal and fiscal policy advisors over the bill, he will be coming up against the fierce opposition of the Kenya Bankers Association, which has been fiercely lobbying to scuttle the bill on ground that it blatantly violates Kenya's free market policy and negates gains made in financial inclusion.
So what we are saying,
the umbrella body of Kenyan Workers KOTU is fully backing the proposed legislation, which it argues would encourage entrepreneurship.
Workers of Kenya will be able to pay their loans easily, as it will reduce the default of payment rate. Cheap and manageable loans products like M-Sharawi by Safaricom are good examples where poor Kenyans access loans without conditions, with low interest rates.
Some banks are currently charging interest rates of up to between 25 and 30%, tabulating from central bank's current base rate of 10.5%. The signing of the bill may see commercial banks' lending rates drop to a maximum of 14.5%. The bill also prescribes the prosecution of top managers of banks that violate the law. But Central Bank Governor Dr. Patrick Njoroge argues that capping of interest rates not only violates global practice but might also see a resurgence of informal lenders. But CORD leader Raila Odinga also wants Kenyatta to sign the bill to law, arguing, and I quote, "We expect the president to act in the interests of suffering Kenyans and to sign this bill into law without further excuse and unnecessary delays."
What we need to do is become more efficient in banking sector, become less greedy in how much money a bank needs to make. You should not be making more than your own clients make. The marginal percentages, they should be mirroring each other.
That it has been passed, it has a major economic impact that the public needed to have been educated about first before that was actually gone past.
The President believes that all stakeholders will find a solution to this issue.
As the public debate continues on the Banking Amendment Bill, President Uhuru Kenyatta's kitchen cabinet will have to consult widely within the country's banking fraternity and advise the president appropriately as he prepares to seal the fate on the bill, which may effectively change the country's banking sector for good. Muremi Mwangi, KTN News in Nairobi.